Good morning, everybody. This is Patrick MontesDeOca with the live trading room for the Equity Management Academy. Excuse me. On this report, we're going to take a look at the dramatic year that lies ahead for 2015. And I'm asking the question, is the dollar about to get crushed? Have we made a top on the US dollar? And so we're going to examine the gold, silver, and the US dollar markets as we are dealing with the current levels that indicate some very interesting observations that we are approaching some kind of a major top on the US dollar, and we have approached some kind of a major bottom in the price of gold and silver. What I would like to do now is share with you a recent article that is to be published in Trader Planet. The European Central Bank just recently announced a $1 trillion package to fight inflation. Whatever these central banks do will not have any effect on the world short term. The ECB program involves printing 60 million euros per month, which is nearly 750 billion euros per annum, and they will start in March 2015 and end in September 2016. Their goal is an inflation target of 2%. The program involves the buying of euro-denominated assets. A bankrupt Europe does not need 1.1 trillion of debt. By doing this, the ECB will have even more worthless assets on their balance sheet that will never be repaid. So why does every central bank in the world want to fight inflation? Because inflation is not good for the consumer. Consumers love low prices. And although deflation is good for consumers, it is not good for the government, and it is not good for central banks, because with deflation, none of the hundreds of trillions in debt will ever be repaid, and the financial system will collapse. The central banks believe that printing money will solve the problem. You don't create wealth by printing worthless pieces of paper. The worldwide printing of money will lead to hyperinflation of an exponential nature. It will not solve the problem because the debt will also go up exponentially. And a hyperinflation spiral will follow by a deflationary collapse. Banks must now be paid to hold money. Switzerland rates just went to minus 0.1%. Therefore, you have to pay the Swiss National Bank to look after your money. The Swiss Central Bank is the most leveraged central bank in the world, with a balance sheet that is 80% of GDP, and like every other central bank, they are sitting on worthless paper, worthless assets. To buy physical gold is the only safe course, with gold rising as paper currencies collapse. Gold is up 150% in rubles in the past 12 months, and in 2015, gold is up 10% in dollars and 150% in euros. The dollar strength is not justified and is coming to an end soon. The ECB decision is likely to mark the final days of the dollar's strength, and as the dollar starts falling, we will see an acceleration on the rise of gold and silver. The Dow against gold went down 88% between 2009 and 2011, and the slight correction in the market is over, and expect another major downturn in stocks markets against gold. I can see that the Dow will fall about 50% against gold in the next few years, and massive money printing to start by the second quarter of 2015. Gold has been held back by central banks, by manipulation by futures markets and by the paper markets. So I think when gold accelerates, it could go up as far more than 50% in late 2015. It is inevitable that we will have a collapse of the financial system, which will happen very quickly. I think that 2015 will be a dramatic year. In a recent article which was published on our website, which was written by Dave Hodges of Common Sense Show, he states that the BRIC nations are fully organized of the fact that they are dependent on currencies which have no future. The BRICS are fully aware of the elite international bankers have transferred much of their wealth into hard assets such as gold and have abandoned fiat currencies. And the BRICS also understand that the international banking cartel is attempting to collapse the medium of exchange utilized by the American people, namely the petrodollar. In response, the BRICS nations have tried to run to gold and have largely abandoned the sinking petrodollar. But it is too late for them to escape their ultimate economic fate. The debt of the BRICS far outweighed their ability to acquire gold as an offset, largely due to credit swap derivatives debt that every central bank on the planet has assumed the responsibility for. In a recent article that was published by the Gold Council, it states basically that central banks have purchased 17%. Their purchases grew 17% to 477 tons. Sales continue to be insignificant. They're not selling gold, they're buying gold. Central banks' net purchases totaled 477 tons in 2014, which is 17% above 2013 impressive 409 tons. This represents the second highest year of central bank net purchases for 50 years, after the 544 tons added to reserves in 2012. On this report, what I would like to do is simply take a look at the price of the US dollar as it is currently trading around the 94.34, down about 75 points for today, or slightly less than 1%. Silver is trading at 16.80, up about 3.5-4 cents, about a quarter of a point, a quarter of a percent higher. And gold is trading at 1221.30, up $1.60, about 0.18% higher. And what I would like to do here is take a look basically at the close relationship that we have between the US dollar and the price of gold. As we are looking at live prices for the April gold futures contract and the US dollar index. Since July, the dollar has soared 19%. And if you take a look on the internet, most of the headlines with regards to the gold market are extremely, extremely bullish. The US dollar is alive and well. The US dollar in demand. The US dollar is higher than any other currency in the world. And that should give you a point of reference to really take a look at what is going on in the US dollar and the price of gold. And what I'm beginning to see here is that for the first time in about what seems to be about 40 years or 4 decades, the price of gold has not collapsed as the dollar has gained strength. And if we look at the price of gold since the floor near the 1200 level, it has been rallying along with the dollar. And this is a true anomaly that I don't believe we have seen in about 40 years or 4 decades. And the sentiment that you see out there is basically that everybody hates gold and everybody loves the dollar. And the sentiment hasn't been this bullish in the dollar for a very, very long time. And that leads me to believe that could be an indication that we have to really take a look at this relationship, because this could be a change in the paradigm of the relationship between the gold and the US dollar. It is a pivot point that this relationship is telling us the transformation is taking place. That potentially we could be looking at a massive bottom in the price of gold as a currency and a major top in the US dollar as a currency. When you really take a look at the relationship of the US dollar against the euro, we're looking at an 11-year high. The US stock market is near its all-time high, and basically the gold market has experienced a deep correction, what I believe is to be a manipulated correction by the central banks that have brought gold down 35% since 2011, and while the price of gold and other currencies are making new highs. While gold stocks and physical gold have crashed more than 70%. According to the sentimenttrader.com, we want to consider the following: that the U.S. dollar was hated in 2010, and this is during the time when the S&P downgraded and gold began to soar. People rushed to gold and got out of U.S. dollars, only to see basically the trade reverse dramatically. The same thing happened with stocks in 2009. Everybody hated stocks. Everybody was looking for 6,000, 5,000 on the Dow Jones. And it became actually the hated asset. The majority of people, I think, missed this move up. And the policies of this government to maintain zero interest rates have only favored the rich and institutions that can borrow money for literally zero and invest it in the stock market and gain these tremendous profits that have been made. Because right after that, the stock market unleashed one of the greatest rally that we have ever seen. The same thing happened, if you call, with mortgages and with real estate. In 2007, 2006, real estate was going wild in the United States. 110% mortgages were issued. Literally, they were giving you money to buy a house. And needless to say, you saw what happened in 2008 that created the Great Recession that we've experienced, and we are still in the process of resolving that experience, as I feel very strongly that according to the levels of debt that the U.S. has been able to acquire, essentially by the balance sheet of the U.S. government has more than quadrupled since 2008, and thus has created a potential bubble that is putting a tremendous pressure on the dollar, even though we are seeing new highs taking place on the U.S. dollar. The only reason why the U.S. dollar is going up is because every other major currency is racing to see who can devalue their currency the fastest. Ladies and gentlemen, we are in the middle of a currency war. This is the first time that currency has taken the limelight in the financial world, and it is the heart, it is the basis, it is the life of basically the economic stability on a global basis. What I believe we have today is a perfect setup. The sentiment on the dollar is extremely high at record levels, and gold sentiment is at the most bearish it has been for quite some time. So let's take a look at the charts and see what they're telling us by using the specific indicators that we are using to identify the market from a technical point of view. If we take a look at the US dollar, we have made a recent high basically of about 95 as of January 26. And we have come down from there to the current levels of 94.33 with a low that was made on the 3rd of March of 93.85. A close below 93.85 would activate the downtrend, and it projects, if we use a Fibonacci retracement from the low that was made at about 78.93 back on May the 8th of 2014, and the recent high that we made of 95.85, we're looking at a 23.6% Fibonacci retracement target of 91.82, a 38.2% retracement target is 89.33, a 50% retracement target is 87.31, and the golden ratio 61.8% target is 85.30. We have incorporated Fibonacci fans using the same criteria to be able to identify for us the support levels after making the high of 95.85. And the first level of support using the Fibonacci trend line comes in at around 90.30. So you're beginning to see that these fan trend line supports are beginning to match the Fibonacci retracements that I just mentioned. The second level of support using the Fibonacci fan trend lines is 68.07. And the third is all the way down to about 85.93. It has the potential for the US dollar just on a corrective basis to come down to 85.30 from its current levels. Now, let's take a look at the gold market and see what we can expect as this bottom that was made back in November the 7th at 11:30 gives us an indication that we have seen a bottom taking place in the gold market. What you see here basically are the algorithms that we use for day trading in the gold market. And it identifies for us the levels of support and resistance, as well as the weekly or the daily pivot point or metrics that we use to identify the trend short-term, intermediate to long-term. And what this is telling us basically is that the market has made a bottom back at 11:30.40, and we have seen a short-term top as of January the 22nd. We are coming down into what appears to be major support levels using the VC price momentum indicator algorithms that essentially we use to trade in the live trading room every day. We also use it for swing trading and for position trading long term. One of the elements or one of the tools that I use in addition to the VC price momentum indicator is trend lines. And the trend lines pretty much give me an idea of resistance and support as well. And if we just take a look at this up trend line resistance level, you can see clearly that the market bounced off this resistance level and is in a corrective process. What we want to see is where the market is completing this corrective process. And so we can clearly see here that in using the daily algorithms, we are at a major level of support with a buy-in signal at 12.12. The buy 1 level is at 12.12. The buy 2 level is at 12.03.